Welcome back. Let's get a corporate conversation going then. Now, Technocraft Industries is the stock and the company on our radar. It hit a 52-week high last week. So amidst all the turmoil, Technocraft Industry was actually gaining. And it's seen a decent up move so far this year. The numbers are also looking good. In the last 9 months of FY23, revenues have gone up by 11%, while profits are up 13%. We're now joined by Sharad Saraf, the CMD of Technocraft Industries, on the show now. Thank you very much, sir, for joining in. Could you give us an indication how Q4 has been? What are you likely to end the year FY23 with? And any outlook for the next year, FY24?
Thank you, ma'am. The last 9 months were a little challenging because of the Ukraine-Russia war, and we lost some business from Europe. Therefore, our results probably could have been much better than what they are. But anyway, we managed to scrape through, even though our top line in the consolidated results was a little bit lower for the comparable period of last year. We managed to do better in terms of bottom line this year. Ma'am, this as far as the future outlook is concerned, I think the Europe and US still continue to be in a recessionary condition, and the times are a little bit difficult. But at the same time, we have taken several steps to mitigate this situation by changing some product mix, as well as doing some cost-saving activities in our organization. We are also doing some capex, new capex of about 400 crores, which should be over in our next 12 months' time, so that our top line by 31st March 24 could look healthier by another 500-600 crores. So overall, I see good possibility for our business, except for textiles, which continue to be a challenging area. And there we are applying our mind to see how we can re-engineer it and bring it back to the profitable level. Maybe the situation of textiles is also likely to improve.
Mr. Saraf, you came right to the point that I was thinking of. I mean, the share has done exceedingly well, very close to lifetime highs in a market that's so volatile. I think the market is quite happy with the way your precision engineering business is doing. The problem is textiles, and there's been a lot of chatter about you looking at perhaps hiving off that part of the business, some sort of a demerger, business restructuring that perhaps is on the table. Can you clarify on that? What are you planning to do with textiles? And what percentage of your revenue is textiles right now?
Yes, the revenue is about, I would think about 30%. Between 25 to 30% is textiles. But it is a difficult business at the moment. And we are thinking of restructuring, something like demerger, making it into a different separate company, so that we could have a closer watch on its accountability. And we are also investing some more money into Amravati, which is a very profitable center at the moment, while our unit in Murad, the textile unit in Murad, is what is bleeding. So we are trying to do some restructuring there, and I think situation will be more clear in another 3 to 4 months' time.
Okay, the other part of the business that I want to ask you about is the scaffolding segment that you have, because I believe a big part of the revenues here, 70 to 75%, is from the export market. So can you tell us what's going on there? And I think after Q3, you had also mentioned that the drum closure business saw pressure on margins because of, elevated costs. You said that you expect that to come down, in the near term. Has that happened?
Yes. So let's take one at a time. As far as scaffolding is concerned, we've had a great year, and we had record-breaking sales in US, and which I'm very hopeful of continuing the same surge even for the rest of the year as well, as and for maybe even the next year. So looking at this bright possibility, we are putting up a new greenfield plant in Aurangabad for formwork, particularly aluminium formwork, which is the new trend now. So when that comes up, our scaffolding business will really grow very well. And as far as concerned, you are quite right. There is a pressure on the profitability. So we are adding some new products, additional products, which will happen in next 2-3 months time. And we have also strengthened our marketing, make it little more aggressive and sharp, so that we get a better result. So I think we will not let our profitability of drum closures down. It will probably look better next year.
When do you think, sir, you will move on demerging the textile business? Is this something on the anvil in the next board meeting?
That can happen. We are evaluating it at the moment. We are evaluating.
But do you think you will be able to conclude it this calendar year? Or is this more, say, 2 to 3 years?
It looks, calendar year looks difficult, but in the long term, yes, it can happen.
Mr. Saraf, just a word on
it can happen.
In a year. Okay, so you're looking at a demerger in a year. And it's 25 to 30% of your revenue right now. Just a word on the balance sheet. Is there any debt on the books? If yes, if as you go through the demerger, will you be moving part debt to the textile entity?
The only debt we have is what was required for our subsidies and for the backward area benefits and so on. Otherwise, there is no serious debt in the company.
Okay, just a word on the margin as well. X of textiles, because now the market will start focusing on your precision engineering business in a bigger way. So X of textiles, what do you think the margin profile can be over the next 1 year or so?
For drum closures, we can expect the margin to be around anywhere between 25 to 30%. And for scaffolding also, we can expect margin of 20 to 25%. This is on a conservative side. We hope to do better than that.
Okay. All right, Mr. Saraf. I think the market's going to watch out for those plans and the execution very, very carefully. Particularly, as you said, next 3-4 months will be critical as you look at options of demerging the textile business. Thank you for giving us all the details today. We'll take a quick break on that note. More on the markets on the other side.